Hello everyone, today's video is based on your requests. Many of you have asked me to make a video about candlesticks, about how to read candlesticks. To be honest, I'm not too fond of this topic, because this is basic knowledge. There are already too many channels covering this topic, but I've realized one issue. That is, maybe everyone already knows the names of the candlesticks, the names of candlestick patterns, but how to use them correctly, to generate profits, you might not know yet. So this will be a video, from basic to advanced, discussing how to read and use candlesticks, candlestick patterns in the most comprehensive and concise way possible. I believe that even if you know the names of the candlesticks, of the candlestick patterns, you'll still gain a lot of value from this video. And if you're a beginner who doesn't know anything, I think this video alone is enough. Let's get started. The simple definition of a reversal candlestick pattern is a group of candlesticks that, when it appears, the trend may reverse. But where does it appear? When does it appear for the trend to reverse? No one talks about that. But before diving into that issue, I'll talk about the true nature of the reversal of candlestick patterns so we can understand and know why. When it appears, the trend reverses. Weak reversal candlestick patterns I won't talk about, because if they're weak, the likelihood of reversal is low, so we don't need to care about them. But strong reversal candlestick patterns, they all have one thing in common. That is, they all have one candlestick, a marubozu at the end. It's strong and engulfs the previous candlesticks. And that's the key point. The marubozu candlestick confirms that the other side has a strong buying or selling force, pushing the price back, causing the trend to potentially reverse. Like in this example, the price returns to the previous contested price zone. As soon as it touches the price zone, it immediately bounces back strongly with a large green candlestick engulfing the previous candlestick. The green candlestick engulfs the red candlestick. That's why we say this price zone. The buyers have completely taken control of the situation. Thus, the trend reverses from bearish to bullish. And in this example, the price returns to the previous contested price zone with quite a strong force. It immediately halts, showing that the buyers have jumped into balance with the sellers. The evidence is the appearance of two small, cute candlesticks, which people often call spinning tops, and when a large green candlestick shoots up. That's the evidence showing that the buyers have continued to win, and the trend reverses. As you can see, the key to reversal candlestick patterns lies in the final confirmation candlestick, and the candlesticks before it only set the stage for the final candlestick. And they're not really that important. But, when we change the candlesticks before it, it creates a new name. Like this is the engulfing candlestick pattern. This is the morning star pattern. To me, those names only add complexity, making it seem more dangerous to intimidate beginners. You don't need to memorize those names at all. You just need to pay attention to the final candlestick. Whether it bounces back strongly enough. Strong means the body of the candlestick must be at least equal to or larger than the previous candlesticks. And now, the most important part of reading candlesticks that everyone needs to know and remember carefully to understand when reading candlesticks becomes valuable. And how to trade based on candlestick patterns. First, reading candlesticks and candlestick patterns is only valuable when it's at a contested price zone, key level. Second, reversal candlestick patterns cannot reverse the entire trend. Third, reversal candlestick patterns provide the highest value when they confirm the continuation of the trend. And I'll explain each one. The first point, reading candlesticks and candlestick patterns is only valuable when it's at a key level. Because the price often moves from one contested price zone to another contested price zone, from one key level to another key level. And on its way, it may randomly show candlesticks and reversal candlestick patterns. That's just a pause in the price before it continues moving, so we don't base our trades on that. The price often reverses at price zones where there was contention in the past. Those are the key levels. And that's also where we read candlesticks to determine if the price is truly reversing or not to place a trade. The second and third points. Reversal candlestick patterns cannot reverse the entire trend. Reversal candlestick patterns provide the highest value when they confirm the continuation of the trend. The term reversal candlestick pattern, because it has the word reversal, people often think that reversal candlestick patterns can reverse the entire trend. That's a misconception. In reality, no reversal candlestick pattern is strong enough to reverse the entire trend. It's only an initial signal showing that the trend may reverse. That signal may be correct or incorrect, but it's very strong when it confirms the continuation of the trend. Now let's look at two examples to understand the nature clearly. In this example, we can easily see this is a large downtrend, and the price is tending to return to this peak, return to this key level. When the price returns to the key level, a reversal candlestick pattern appears, so many people will place a sell order. In this case, sell down. And when placing a sell order, we think this order will have a high win rate because we're following the large downtrend. But let's look back a bit. The trend we're standing in is currently an uptrend. An uptrend because the price has created a higher high and a higher low, and we think this reversal candlestick pattern can reverse an entire uptrend. Now let's see the result together. So in this order, we hit the stop loss. The uptrend continues until the price breaks through this low. Breaks through the low of the uptrend. Only then does the uptrend end and a downtrend begins. That's why no reversal candlestick pattern can reverse an entire trend. In this example, we can see that the current trend is an uptrend. The price has created a key level, a low here. And when the price returns to the key level, a reversal candlestick pattern appears, so we place a buy order in this case. Buy up. And the order in this case is completely different from the previous case. In the previous case, the price returned to the key level. A trend appeared with clear highs and lows, and the reversal candlestick pattern couldn't reverse the entire trend. But in this case, it's different. The price returns to the key level without forming clear highs and lows, so it's not considered a trend. It's only considered a pullback. And the reversal candlestick pattern reverses the pullback very well at the key level. It supports the continuation of an uptrend, so we place a buy order in this case. And we hit the target. So the reversal candlestick pattern is very strong when it confirms that a trend is continuing. Some of you have commented asking me, sometimes you see me placing orders on weak reversal candlestick patterns, and sometimes when they seem strong, I don't enter. The reason is simple, although weak, but it confirms the continuation of the trend, which is stronger than a strong pattern that goes against the trend. Talking back and forth, I only rely on the phrase, "The trend is your friend." That's all the content about reading candlesticks. I don't know if anyone finds anything unclear or if there's anything missing. If there is, please leave a comment below. Thank you all for watching my video. See you in the next videos.